If you're trading stocks short term, this right here might change how you do it forever. Let me show you how a swing trader can be far more efficient with their capital by using options, more specifically credit spreads in this case. So right now, this stock is trading around $266.50, and I want to be bullish in the short term. If I were to buy shares of the stock, this is what that would look like. I'm willing to risk, let's say, $250 on the trade, and I put my stop below that recent swing low where this red line is, and I can risk about $11.50 per share. That means I can buy roughly 21 shares to risk $250 on this trade. And let's just establish a real simple profit target of 60 bucks is all I'm looking to make on this trade. That means I need the stock to go up about $3, a little less than $3 to take my profit. Now, in order to place this trade, buying 21 shares of this $266 stock requires $5,600 in capital. Now here's the really interesting part though. According to option statistics, there is an 84% probability that price is going to touch 270 within the next 30 days. And that sounds pretty good, right? But before we get too excited about that, let's take a look at the same idea using an option spread. Instead of buying shares of the stock, I sell a put credit spread. I'm going to sell the 255 put and buy the 252 put. And I collect $60 in premium for that spread. My risk is defined at $240, which is also the capital required for this trade, and puts my break even down here below where I want it to be, down just below 255. Now there is a 74% probability of realizing my max profit of $60 on this trade within the next 30 days. So yes, the stock trade does have a higher probability of touching that 270 price, 84% versus 74%. But a couple of key differences we need to look at here. One, the spread ties up a fraction of the capital, $240 versus $5,600. That's a really big difference. And it also gives me a much wider range of outcomes where I can still make my max profit. So you see, I'm not using options to take on more risk. As a lot of people think options are risky, I'm actually using options to remove unnecessary risk. And that's why spreads are more efficient. They are more forgiving than buying shares of stock, and why I almost exclusively use options for my short-term trading. Now, if you want to learn how I use these defined risk option spreads as part of a calm, structured trading plan, well, I want you to comment the word risk below and I'll send you the details, or you can simply visit stocksurpastors.com. I will see you guys in the next video.